Hey guys, so I know the market has been crazy lately, and I'm sure you're wondering how this can affect you. So I know the interest rates have been going up. They've actually just broke the 5% mark here in Canada and Sudbury. So if you're shopping around, you're not getting below 2% anymore. You're above 5, which really affects the house prices because the affordability goes down. And a lot of people are wondering if there's going to be a crash. So there's a few things that the rising interest rates are affecting. And they're rising a lot faster than we expected them. So what they're affecting not only houses, but also car loans, student loans, home equity line of credits, people's snow machine and quad loans. So there's a whole lot of things that the interest rates are affecting. So what do these increasing rates mean? How does it affect you in the near future? Maybe it's better to buy at the end of the year now because the market will have softened a little bit. Maybe it'll be a good time to buy a car. So what I'm going to do is going to go through the reason the interest rates are going up and how it's going to affect you here, a Sudburian in Sudbury or even in Canada, because we're all very much this very similar market, although our house prices vary a little bit, which gives us a little bit of an upper hand, which I'll get into. And I also want to start a conversation with you guys. So I'm going to give you my opinion based on research and the things that I know, but I can be wrong. So if you have some comments you want to make, put them down in the comment section below. Let me know what you think. If you think I'm right, if you have a different idea, if I'm wrong, please let me know. I would love to learn more and I can make another video at a future date that can talk about that. So the rising interest rates, what is the bank thinking? What is the Bank of Canada thinking? Why are they raising them so fast? Well, I'm sure you've noticed around that your cost of filling up, getting gas has gone up tremendously. The groceries that you're going to buy at the grocery store have gone up a lot. A loaf of bread is worth way more than it was before, a brick of cheese. The house prices are going up, the price of cars, all of these things are going up in price. So what is that really considered? So that's inflation. When you really look at what the Bank of Canada is trying to do, it's to slow down inflation. So over the last couple months, over the last couple years, so the raising of the interest rate sounds crazy until you realize what they are actually trying to do. So inflation has been out of control, which means the cost of goods are going up. And right now we're at just over 8% inflation, and the Bank of Canada wants it around 2 to 3%, which actually is pretty wild, right? So there's a big gap. So what does that 8% mean? It means that over year, people are spending a lot more on goods. So what does inflation mean? There's way more money than there are goods to buy. So there's more dollars allocated to each thing. So the price of the goods are going up consistently. And I know you felt it, and so did I. The price of everything was going up. So they're trying to slow down inflation. That is their main goal. And how do you do that? So when there's more dollars in the economy, which is what the low interest rate was doing, right? The cost of borrowing was so low that they were trying to put an influx of money into the market because they were trying to reverse the economic. So Tiff Macklem said they'd even put us into a recession in order to slow down inflation because it can really get out of hand. Imagine paying $10 for a block of cheese. That'd be crazy. But that is the cost. That's what would happen if the inflation got out of control. So what caused inflation? And that was actually the opposite. Remember 3 years ago when we went into this whole COVID lockdown stuff? Well, the Bank of Canada said, we want to reduce the economic impact of lockdowns by reducing the rates. So eventually, the rates were close to 0% coming from the Bank of Canada. So cost of borrowing was extremely low. So what does that mean? That means people could borrow money, use it to buy things at a basically zero cost. And that's been forever in history. The cheaper the cost of borrowing money, the more expensive asset classes become, which is real estate, vehicles, and anything that you buy. So their goal was to increase spending and get people to put more money into the economy because they were afraid of all the lockdowns, all the loss of jobs, of people stopping to spend, which would put us into a huge recession where everyone's just hoarding their money and there's no growth in the economy. So they were trying to do that to protect us. Then you throw in the supply chain issues because of COVID. So not only was there a lot more money in the economy available for people to spend, there was also the supply issue where there was a lot less goods coming into the country and a lot less inventory there available. So for example, I'm in real estate in the housing market. There was so many people that wanted to buy. There was 30, 40 showings per property and sometimes 10, 15 offers, that's why the prices got pushed up. Because there's way more people looking to buy than there are actually assets and things to sell. So that drives the price, supply and demand, right? So I know what you're thinking right now. So now that they're raising the rates, the demand is gonna go down and we're gonna see a huge crash. So not exactly. Here in Canada and in Sudbury, there's 4 points that I wanna make that kind of protect us in a situation like this. So these are things that I believe that are gonna help us so we don't see a huge crash. We're gonna see a little bit of a slowdown and it's gonna level out, but we're not gonna see an extreme crash. So point number one, in Canada, because we've seen such an increase, most Canadians have a lot of equity in their home, which means the value of their home has went up significantly, but they only owe a certain amount. So they could sustain a big drop in price and still be okay. So in order for a crash to happen, we need all of these people to sell their home, to just flood the market with supply. But that's not gonna happen because they're not gonna have to sell their home because they have such a big buffer. So if they do have a little bit of trouble making payments on their car, they can go get a refinance, pull out $20,000 from the equity of their home and maybe pay off their car, and then they have a lower interest rate on their home. So there's where the home equity for Canadians is huge. So real estate has always been an important part of the economic factor in Canada, and this is one of the points that proves that. Number two, unemployment is also extremely low. Historically, when the price of interest rates are going up to slow down inflation, you were trying to cause a recession, and then the jobs would go down. There'd be a lot less jobs available, the unemployment rate would go up, so there's less people that have money to spend. So in Canada, being extremely low, 4.9% unemployment rate is extremely good, which means most people have jobs, most people have income to support their debt. So which is a great sign, right? So these are less people, less chances of people defaulting. This could also change though, don't get me wrong, if we go into a huge recession, there are possibilities. So I'm not saying I have a crystal ball, but for now, our unemployment rate is extremely low, which is a good sign. Number three, the stress test. Again, this was awesome. Back in the day, it wasn't so popular. People were wondering why the bank was doing this. But they put it in place, projecting. So the banks and the government put this in place in anticipation of what was to come. They knew they were gonna have to raise the interest rates at some point. It's not sustainable to have the interest rates below 2% for a 5-year fix. That's just crazy. We'd all love that, right? And we did for a couple months. So what the stress test did is it made everyone qualify at 5%. It was just over 5%, but let's use 5%. So everyone that got a loan, they got a home with a mortgage, even if their posted rate that they got was 1.7, which I got on my house, I had to get approved assuming that the interest rate was gonna be 5%. So when it first came into play, it wasn't that popular. People didn't like it. It affected the affordability. But what is really important that's happening right now is with the interest rates rising, technically, everyone who's bought a home can still afford everything that they bought because we're only now at the 5% mark for a 5-year fix. So we're actually very much protected by what they implemented, I think 4 or 5 years ago now, which is great. That means less defaults. Again, what do we need for a crash? A ton of people to sell their homes and not as many people buying. Point number 4, we still have a housing shortage in Canada and in Sudbury. There's still a lot more demand for the amount of things that are for sale or even for rent. So since the market has slowed down in the selling aspect of the market, the rental market has been going through the roof still because there's still a lot of people that need places to live. They need a home. You're always gonna need a home. So that was already a problem, plus the amount of immigrants that Canada promised coming in the coming years. I think it's great for our economy to have more people involved, getting more jobs. Our unemployment is so low, so immigration is a key factor in Canada, and I love it. So Canada is projecting 450,000 new immigrants, so that's a big population increase, and all those people need a place to live. So they're either gonna buy or gonna be renting. So there's even more demand in our market, a big influx. Even if something happens in the world, Canada is a great place to live. So we're always gonna be attracting some immigrants. So the demand is actually offsetting some of the pain of the interest rate rises. If you're a homeowner, this is a good sign. So in Sudbury, What does this mean for Sudbury? If you're a local resident, you're looking to buy, maybe you're looking to sell, what's the right move? What's happening to our economy? So in Sudbury, we actually have the benefit of being a little bit on the lower side of the average house price. So in Ontario, the average house price was starting to soar, but we're still well below that, which is why we got popular for rental properties. But it also makes our economic impact of the rising rates a lot less important. For example, a 1% or 2% increase on a $450,000 home is a lot different than a 1 or 2% increase on a $1.2 million home, which Toronto was almost averaging that for a little bit, which is pretty crazy. So for us, we didn't see as much of a decline. We're at about 13% since February. But that being said, if you invested before that, so we're seeing a slight decline, but I think we're going to be leveling out a lot faster than some of the bigger cities where the prices were actually just astronomical. So how am I advising my clients right now? Well, for one, if you're someone who's an investor, this could still be an opportunity. Yes, the cost of borrowing is a little bit higher, but the rents have also increased a little bit. So that could offset your interest. You're also getting a better deal on the buy. So if you're planning to buy a house, hold it, cash flow, build equity, it could be a good time for you to buy. But on the flip side, maybe you're someone who likes to flip properties. On that end, you might be better off waiting a little bit and seeing what the market does. Because if it goes down a little bit more and you're planning on flipping it, your margins might not be quite what you expect them to be. So this might be wait 3 to 9 months and see what happens there. If you're currently renting with your mom, your dad, and you have no bills or no expenses, housing expenses I should say, then you have two options. If you really can't stand it at home, then maybe you do buy because the prices have dropped a little bit. It seems like the interest rates are leveling out a little bit. They're saying maybe a slight increase, but the 5-year fixed actually just dropped a tiny bit. Or what I recommend, and I always recommend this, not only in a time like this, but if you're at home with no expenses, save up a little bit of a nest egg. Get a little bit of extra money, put it in the bank account, so you can make a good decision and buy a house that you really like with a little bit of a backup fund in case something happens. Because you know, home ownership, something always happens. And in the case of an upgrade or a downgrade, if you're looking to get a new home, a little bit of a bigger home, you're trying to take a step up. A lot of people, when the market was increasing, they were like, oh man, my house is worth so much more, I can go to that step up home. Well, that is the case. The step up home is always gonna be exactly that, a step up. So you're gonna be spending more no matter what, if the prices drop or the prices go up, because your house follows it. So right now, what I always tell my clients is the market doesn't make a huge difference if you're doing this, if you're making a step, because you're always gonna have a little bit of a bigger mortgage. But what really makes a difference is the right house. You have more time to wait now. You can put a condition of selling your house. You can put all the conditions mostly, not all the time, but you can put most of the conditions. So you don't have as much pressure on yourself for making that big jump. Also, there's a lot more options, so you're not settling for something. So if you're looking to sell, you just wanna make sure you're making the right decision. So you wanna make sure you're getting the best exposure possible when you're selling to get the maximum dollar. There's a lot more competition out there, prices have slightly dropped, so you also have to be priced correctly. So it's going in with that confident price and marketing strategy. And what I always say to my client is you wanna make sure that you're making the right decision for you when it's right for you. And everyone's motivations, plans, reasons for moving are different. And you wanna work with someone that understands those, whether they're, hey, you have a 1-month timeline, or you're like, hey, my timeline's 3 years. Talk to a professional, a team like us that listens to your needs. Hey, if you buy a house right now or later, it doesn't really matter. We just wanna make sure that the move that you're making is at the right time for you and you're gonna be happy with it. So everything that's going on around us is all irrelevant because what you want is what we want as well. So guys, I'm Tristan Ritchie from RitchieNatale Group at Lake Cedar Realty. I'm a team leader here. We have a team of dedicated agents that are willing to help people buy, sell in any market. And honestly, my goal is just to educate everyone as much as possible. So that's why I made this video. It took me a long time to make. So if this was any type of education for you, or if this helped at all, please leave a like and comment below. I'd really appreciate it. Maybe subscribe to the channel as well, and check out some of my other videos about Sudbury and our market. If you want me to make any other videos, put also the comments below, or send me an email, shoot me a text, or call me. we're always available to talk. So thanks for listening. Talk to you soon.